Welcome back. This is our top 10 segment. We talk about all the stocks that are in focus this morning, and we have plenty to look at. So let's start with Nalco. Nigel, why are we looking at that one?
Well, India's Kabul as well as Argentina's Cambian, they have signed an agreement for exploration of mining of lithium. What is Kabul? Well, it's a JV between Nalco, Hindustan Copper, as well as MECL, and Nalco has close to around 40% in this particular JV. Well, so what does this news mean? It's a sentiment positive at best for Nalco, because initially they'll focus on exploration. Mining at best will be 3 to 4 years away. But the stock will react positively because it's a positive sentiment, on the stock. Additionally, the stock came out of F&O ban, so that's another technical factor that will work out for them. So the news flow as such is just a sentiment positive, but because of the technical factor as well, you'll expect the stock to open up in the green. By the way, yesterday, it ended at the high point of the day.
Nigel, we'll watch out for that one. A big 8% move yesterday, and I think
3%.
3% up yesterday in trade out of the F&O ban, as Nigel pointed out. Housing finance companies at the margin, the new RBI circular is at a bit of a negative. Abhishek is here to explain what the RBI is saying here. Abhishek, morning.
Morning, Prashant. So RBI has tightened up, regulatory, supervisory over HFCs. So RBI has issued a draft circular to align norms of housing finance companies in line with NBFCs. So proposed changes are they will maintain 15% of deposits in liquid assets. It was at 13% right now. Deposits can be only 1.5 times of your net owned funds. So it was around 3 times earlier. So deposits maturity has been capped to 5 years or 60 months. Earlier, it was a maturity level of maximum of 120 months or about 10 years. So they must obtain investment grade credit rating once a year. That's become a compulsion. And apart from that, they have to take board approval for investment in unquoted shares of another company which is not your subsidiary. So value of investment in AIF, that is alternate investment fund, in excess of 10% should be from the net owned funds, and it should be reduced from the net owned fund calculation as well. So for this, minimum 50% of fund in AIF, that is alternate investment fund, must be from HFC. So just point in case IFL, HFC, they have in their housing finance about 160 crore of investment in AIF. They have already disclosed that about 116 basis point is the impact from RBI ruling. So we will have HFCs in focus today, given the fact that PNB Housing Finance, Canfin Homes, LIC, IFL Home Finance could be under pressure in trade. Back to you.
Okay, Canfin Homes, LIC Housing, PNB Housing Finance, right? A couple of the stocks that you're looking at. There could be some pressure there as the RBI has tightened norms. But I guess in the larger scheme of things, it's always better for the industry. But Jio Financial is also something that you're watching today. Abhishek, how did it look?
Well, the numbers have come in, and there are we have to take into account, given the fact that in Q2 they had one-off dividend income. Total income is at 413 crore versus 391 crore in the previous quarter. Interest income is up to 269 crore versus 186 crore in the previous quarter. Now, profit X of associate and JVs is at 227 crore versus 233 crore in the previous quarter. They held a con call also. Con call highlights are that management sees large opportunity in lending, calibrated approach to unsecured lending. So Jio Financial will focus on secured lending. In that, they will look to launch a DAS, that is device as a service, involving air fiber, phones, laptops, supply chain financing, loan against shares, and home loans as well. In unsecured, they would be focusing on personal loans and consumer durable loans as the key products. So they will revamp the digital saving bank account within the payment bank. A soft launch of debit card is also seen in the near future. Insurance tie-ups have increased in Q3 FY24. Back to you.
Okay, Fedbank, FINA also came out with numbers. Abhishek is here with details on that one as well. Abhishek.
Strong numbers coming in from Fedbank. The disbursals are up 23.5% YOY and about 14% sequentially. AUM growth is pretty robust at 34.5% YOY and about 6.8% sequentially. Asset quality has improved. Gross NPA ratio is down on a sequential basis. NII growth is at 31% YOY and about close to 10% sequentially. The provisions have increased on a sequential basis by 53%. However, the PAT reported has grown by 27.8% YOY and about 13.2% sequentially. The only small negative is the spreads, which have declined by 10 basis points on a sequential basis, but they remain strong at 8.7%. Back to you.
Okay, you can catch the management as well of Fedfina Bank at 9 a.m. on Bazaar today, so not too far away. But DCX Systems is the other stock that we're looking at this morning. Vivek has his eye on it. Vivek, why are you doing that?
Well, good morning. Large fundraise coming in as far as DCX Systems is concerned. So the board has approved the fundraise via the QIP route. The floor price works out to 358 rupees a share. But as per the term sheet that we saw, the indicative issue size that the company is going is close to 500 crore, a 300 crore base size, and a green shoe upsize option of another 200 crore. The indicative issue price is at 341 rupees a share, which is a further almost 5% discount to the SEBI floor price. So what is the dilution? Slightly above 15% dilution of the existing equity is what the company is looking at. Going with the red on this name just due to the large discount that has been given to the current market price. But the stock has been a significant outperformer in recent times.
Got it. Okay, all right, Vivek, thanks for that. But Vivek, also tell us about PNC Infra.
Well, very interesting deal as far as PNC Infra is concerned. This particular trend of infra companies going ahead and bunching up their tolling assets and selling it on InvIT continues. So what PNC Infra has done is that they've divested the equity stake in 12 road assets. This is for a total enterprise value of slightly about 9,000 crore rupees. So this particular divestment has been done to Highways Infrastructure Trust, which is an InvIT, and this particular stake is completely divested to them. Highways InvIT is actually one of the sponsors for that is the KKR fund. So this particular assets comprise of 11 national highway HAM assets as well as one state highway BOT toll asset. Now, what's actually happened is that the equity value for this particular deal is at 1.7 times at 2,900 crore versus an investment of 1,740 crore by the company. So positive deal over there for the company. Along with that, remember, 1.7 times equity is slightly higher than the typical valuation at which the deals happen in this particular space. With 1.5 times is where the typical valuation happens. So PNC Infra, watch out for the name. A good asset divestment at strong valuations.
All right, thanks a lot for that. I'm also watching out for Landmark Cars. I expect the stock to be in the green after a very good update that they gave in this quarter. They reported their highest ever quarterly pro forma revenues in Q3. They mentioned that the reason for that is because the festive period was very good. There were a lot of new model launches and they had new brands and outlets that improved supplies as well for them. The after-sales business also continues to be very robust. So let's just look at the numbers. Total revenue growth came in at 8% year-on-year at a little over 1,300 crores. The after-sales services revenues went up 16% year-on-year. The base is slightly small over there, about 220 odd crores. But vehicle sales, which includes their agency sales, went up 5.5% year-on-year at 1,051 crores. So clearly, the premium end of the market is growing quite well. They also said that they have been able to meaningfully reduce their inventory, which is a positive thing. So I'm going with green on this stock.
Okay, green on Landmark there. And Ekta joins us to tell us about Aster DM. They had done that big deal and we're waiting for clarity on dividend, and that's come about. Ekta, go ahead.
Thanks for that. Well, just a quick reminder, Aster DM sold its Gulf business to Fadjo Capital and the promoters for $1 billion. They had a board meet on the 15th of Jan to discuss the progress of the transaction. The board was briefed that there is satisfactory progress on conditions and they aim to complete the transaction soon. Now, the board has said that they are desirous to consider distribution of 70 to 80% of upfront consideration of $903 million as dividend to shareholders. The consideration is in the range of 110 to 120 rupees per share as dividend. And that will probably be, maybe we could probably see an upside on the stock, though we knew that they will be aiming for dividend distribution because the promoters will be funding a part of their transaction through the dividend that they receive from this. Now, separately, the board also took note of certain questions received from shareholders, including proxy advisory firms and the responses by the company. So the company did provide clarifications, explanations on the valuations, the transaction that it did not involve the sale of DM Medicity, which is an Indian arm of the company, non-compete, medical value travel agreement, promoter family participation. So maybe there could be upside on the stock on account of these factors.
All right, Ekta, thanks very much for that. More stocks with news flow. Upasna is here with that list. Upasna.
While first up is Angel One, the company has recorded strong client addition and commodity market also continued to outshine for the company. The company has recorded highest ever client addition in the quarter, which was up almost 16% sequentially. In terms of client base, that also expanded 14% sequentially. The average daily turnover saw an uptick of almost 21% on quarter-on-quarter basis, and revenue was flat for the quarter, up almost just about 1% sequentially. PAT was down almost 14% on quarter-on-quarter basis. Now talking about the turnover market share, the equity turnover was up 62 basis points, stood at 26.8%. F&O was up 62 basis points, stood at 26.9%, and commodity, as mentioned earlier, clearly outshined with an uptick of almost 212 basis points, stood at 58.8%. Well, next up is RVNL. The company emerges as the lowest bidder for 251 crore worth power transmission project in Jabalpur, Madhya Pradesh.
Well, let's just recap all the positive news flows coming in from Jio Financial, Fedbank, FINA. You also have the PNC Infra, Nalco, Landmark Cars, Aster DM, Angel One and RVNL. While stocks with negative news flow today, housing finance companies, of course, may be some pressure there, you never know, and DCX Systems as well. But all eyes are now on what's happening with the Houthi rebels and, all the escalation as far as the Middle Eastern conflict goes. Things at the Red Sea have not gotten any easier either. Crude prices have spiked up overnight. Manisha Gupta is here with a roundup of all the action there. Manisha, what's the latest?
Oh, well, yes. The crude oil price is trading on the higher side of the range, but we haven't been able to cross above $80 very successfully, and that is because there is growing oil production in the non-OPEC countries, and the Chinese demand is still weaker, and the China monetary policy yesterday did not move at all. But the markets are eyeing the Middle East developments, especially as Houthi says that their movement will expand to targets in Red Sea. More oil tankers are now steering clear of Red Sea. And apart from that, the Libya protesters also have threatened to shut 2 more oil and gas facilities. This is after shutting 2 facilities in the previous week itself. So we are looking at higher prices when it comes to crude. Also, strength is continuing in case of zinc prices. This is after Nyrstar has suspended zinc smelting at Dutch plants. So supply concerns coming back in case of zinc. But the other metals have seen a bit of a pressure building up with no action from China, strength in US dollar. So you have the steel rebar trading at a 2-month lows and iron ore trading at a 6-week lows as we start yet another day in Asia today.
All right, Manisha, thanks very much for that. We'll come back to you for more. But for now, the big commodity oil is not reacting in any significant way at all to that attack which Manisha was talking about. We'll take a very quick commercial break here. On the other side, Hebang Jani will join in for some specific stock talk. Lots to discuss. Stay with us.